Many beginners believe investing requires complexity and constant adjustment. They feel overwhelmed by choices, strategies, and opinions. This confusion often leads to inaction or costly mistakes. A simple portfolio approach offers clarity instead of chaos. Most new investors start with uncertainty rather than confidence. They worry about choosing the wrong assets. This fear pushes them to overthink simple decisions. Simplicity is often ignored because it feels too basic. A simple portfolio is built around clarity and discipline. It focuses on long-term ownership rather than frequent trading. The goal is steady progress instead of excitement. This mindset reduces stress and mistakes. Beginners often believe diversification means owning many things. They spread money across ideas they do not understand. This creates the illusion of safety. True safety comes from understanding and balance. A simple portfolio limits choices deliberately. Fewer assets are easier to monitor. Fewer decisions reduce emotional errors. Discipline improves when complexity is removed. This approach emphasizes broad exposure rather than precision. Broad exposure reduces dependence on single outcomes. It allows growth without constant adjustment. Stability becomes the priority. Beginners often underestimate the power of time. They focus on short-term results. Short-term focus increases anxiety. Long-term focus restores patience. A simple portfolio works because it survives volatility. Market swings feel less threatening when structure is clear. Clear structure reduces panic. Reduced panic improves outcomes. Many people confuse simplicity with lack of ambition. In reality, simplicity supports consistency. Consistency compounds quietly over time. Quiet progress is often underestimated. A beginner portfolio should be easy to explain. If it cannot be explained clearly, it may be too complex. Complexity hides risk rather than reducing it. Simplicity exposes risk honestly. This approach also limits unnecessary costs. Fewer changes mean fewer fees and taxes. Costs quietly reduce returns over time. Reducing them improves long-term results. Beginners benefit from rules that reduce decision-making. Rules remove emotion from moments of stress. Stress often leads to poor timing. A simple structure protects against that. Market noise constantly pressures investors to act. Headlines create urgency without context. A simple portfolio ignores most of this noise. Ignoring noise preserves focus. Patience is easier when the portfolio feels understandable. Understanding creates confidence. Confidence reduces reactive behavior. Reactive behavior damages returns. This style of investing favors ownership over prediction. Predicting markets is difficult and unreliable. Ownership benefits from growth over time. Time becomes the main advantage. A simple portfolio also encourages regular contribution. Regular contribution builds habit and discipline. Discipline matters more than timing. Habit supports long-term success. Beginners often fear missing opportunities. This fear leads to frequent changes. Frequent changes increase mistakes. Stability reduces regret. Volatility is inevitable in markets. A simple portfolio accepts this reality. Acceptance reduces emotional reaction. Emotional control supports better decisions. This approach is designed for normal people. That does not require constant attention. It does not demand perfect timing. It allows investing to fit into life. Understanding risk becomes easier with simplicity. Risk is no longer hidden behind complexity. Clear risk allows better preparation. Preparation reduces fear. A simple portfolio also scales over time. It can grow with experience and confidence. Growth does not require immediate complexity. Complexity can wait. This philosophy reflects the thinking of Warren Buffett when speaking to everyday investors. He emphasized simplicity and patience. He valued understanding over cleverness. That perspective shaped long-term success. Beginners who start simple often stay invested longer. Staying invested allows compounding to work. Compounding rewards patience consistently. Time becomes the strongest ally. In the end, a simple portfolio is not about limitation. It is about focus and discipline. Focus reduces mistakes. Discipline builds durable wealth.